Hey guys, so I did a review of my long-term ETF portfolio and I thought better do a one for the stock side. So this is a much bigger pie, 37 companies at the moment, although it is changing a little sort of as time goes on. But yeah, so I do own some of these already. I just haven't imported them into the pie yet because then I'll start sort of investing just automatically once they're in here. But yeah, so just to give you a sort of very brief overview of these because there is 37, so I'll have to be brief. So I have a 5% position in Walt Disney. They're sort of moving towards the streaming side, but we just think it's a strong brand over time. So many different parts of their business, the parks and the movies and everything. So I think that'll be strong for years and years to come. 5% in Nintendo, again, strong brand over years and years and years. They sort of make their own games, so they're not reliant on third-party games, and they've got some of the best-selling consoles of all time. Volkswagen, this is my sort of anti-Tesla play, if you like. They sort of own lots of different companies, Audi, Seat, Bentley, Skoda. They've got the MAN and Scania truck side. So I think between that group, they should prosper over time. I expect they will sort of combat the electric car side of Tesla, and they're investing a lot in that. So that's one I want to be in. Realty income doesn't really sort of need too much introduction. Most people have this as a bit of US real estate income, so have 4% in that. Johnson & Johnson, again, sort of one of the biggest healthcare companies in the world, so that's a fairly stable dividend company. 3M, I think, just gives you a reasonable sort of industrial portion of the pie. They hold sort of 140,000 patents on all sorts of products around the world, so that gives you a reasonable sort of industrial sector. Procter & Gamble, again, sort of consumer, sort of staple items that people always buy. Your sort of soaps and your washing powders and all that sort of thing. Everyone always says you've probably got products of theirs in your house or bathroom. Diageo, I think, is a really, really strong one. A lot of a drinks company. A lot of people sort of go for Anheuser-Busch. So I think they own Budweiser, but that's sort of not. I see Diageo as a stronger overall group of brands. So I think they own Guinness, Smirnoff, Captain Morgan's, Johnny Walker, Bailey's, Tanqueray. Just see that as extremely sort of strong group of brands that don't really get a lot of competition. Sort of thing. If you like Guinness, you like Guinness. There isn't a huge amount of competition. Same with sort of Bailey's. It sort of stands on its own. So see that as a good long-term hold. Siemens just gives me a bit of sort of European infrastructure, bit of renewables. Seems a reasonable company. So that'll be part of my European sort of allocation in the individual stocks. GlaxoSmithKline, a UK but sort of global pharmaceutical company to sort of pair with Johnson & Johnson. Glaxo a little bit sort of more cyclical. They pay a higher dividend but sort of go up in share price a bit less over time, so just gives you that combination of share price growth and dividends. Coca-Cola, again, sort of staple of everyone's portfolio. But I do quite like that they're in the sort of smoothie and juice game and that sort of thing. So it's not just Coke, and even in the sort of fizzy drinks, they own quite a. Or you'll see later on, I've got Pepsi as well. Between them, they sort of corner certain markets. So quite like to have them. And then Pepsi. So between Coke and Pepsi, they sort of own the majority of sort of soft drinks in certainly in the UK shops at least. Sort of except the energy drinks, they're not really into that, but sort of quite like having Tropicana and all the sort of different juice brands between them, so they've got the more healthy side. And Pepsi also own Walker's, Lay's crisps, sort of Doritos and that sort of thing. So, and Quaker Oats seems very strange. Not many people probably know that they own that. So lots of sort of food items as well in Pepsi. So quite like to hold the two of those. Shell, sort of moving away from oil, but should have some decent oil revenue for the next sort of few years while it transitions over to be a renewable energy. I think a lot of the sort of big oil players and energy players will be part of the sort of renewable infrastructure, just because they've got so much money. So it's sort of beaten down, I think should be a good hold for long term, if I can get in the next sort of 6 months to a year, couple of years maybe, although it has just had a big pump up from the vaccine news. Unilever, very similar to Procter and Gamble really, the sort of UK equivalent, if you like. Lots of household products in your kitchen and bathroom, and they also own some decent sort of long-term food brands. Again, reliable dividend. McDonald's is sort of a bit unusual now that they're turning into this sort of franchise model where they don't really run the sort of restaurants themselves, sort of almost turning into a real estate investment trust. But should be good long term. Legal and General, this is a sort of very high dividend financial company. They have a lot of sort of mutual funds and index funds, and do sort of a lot of insurance. So it gives me a bit of financial side. I'm not really too keen on the US banks and financial side, so this just gives me a little bit of financial, but I won't have too much in financials. Rio Tinto, sort of one of the biggest miners, sort of base metal miners in the world. So I want to have a decent allocation to that. BT is the UK's sort of biggest telecoms provider and broadband provider. There is competition, but BT still own a lot of the existing infrastructure, so other companies rent their service off BT. So sort of see that as still having somewhat of a monopoly. Been downtrending as a share for years, but can't see it sort of going too much further down. So I think this will be a long-term hold. Aviva, sort of very similar to Legal and General really. Just gives me a bit of diversification in the UK. American Tower, interesting one, sort of real estate investment trust, but basically the sort of mobile phone cell towers around the world. So it gives me sort of global exposure, and it's a little bit different to just ordinary REITs. Airbus, You'll see I hold Airbus and Boeing. So between them, they sort of basically have the monopoly on planes, and they also both have a strong defensive sector. So again, I sort of quite like these sort of monopoly, duopoly type companies. I think they'll always do sort of reasonably well, and the defence is basically always going to be there. Store Capital is a sort of mostly US REIT, but so I thought I'd just have this a little bit different to Realty Income. They sort of seem to rent to the lower end of companies, but companies that they believe can pay their rent, so they pay a higher dividend, but it's supposedly safe. So it just gives me a bit more diversification. Mondelez, quite interesting one. They own Cadbury's and a lot of sort of snack brands. Seems a sort of a solid company. Don't think Cadbury's is going to go anywhere anytime soon. So just gives me a bit of food income. Now, Nike and Adidas sort of see as a, two of the strongest sort of sports brands in the world. But I'm considering removing them from the pie, to be honest. Neither of them pay a particularly strong dividend. They're more sort of share price growth companies, so I don't really know how they would work out in the pie. I would probably have to keep selling shares to reinvest in other companies and sort of provide the income. Leave your thoughts in the comments below on those two. May remove those. Taylor Wimpey and Barratt's, two sort of UK house builders. I don't tend to go for any sort of US or global house builders or sort of property companies, just because I don't know the industry that well, but I think the UK housing industry has been undersupplied for sort of years, potentially even decades. It doesn't seem to be changing anytime soon, so I think the house builders will always sort of do well going forward. So have two of them. I think both of these are pretty solid companies as well. I'm not really keen on Persimmon, because they seem to be the sort of lower end of the quality spectrum. Get a lot of complaints, and I think these two sort of have a bit of a better reputation. So Boeing, as I said, Boeing and Airbus just gives you sort of both sides of the duopoly, basically. Digital Realty Trust, interesting one, sort of real estate investment trust based on data centres and data storage. I think with the sort of demand for that sort of thing now, companies are needing more and more storage. So this should be a reasonable long-term hold, quite a healthy dividend. So good company. Similarly with Tritax Big Box REIT, so real estate investment trust, focused on sort of big warehouses and, as they say, big box sort of buildings. They're sort of, I think 10-11% of their revenue comes from Amazon warehouses. So they are into that sort of thing. Again, online sort of businesses and shipping. They're always going to need these sort of big storage areas. So that seems a strong one. I also want to hold, they do a Tritax Eurobox, which is basically the same thing, but buildings across Europe. That's currently not on Trading 212, so I have to hold that elsewhere. Interesting one, Archer Daniels Midland, sort of staple food ingredients company, essentially. They don't sort of seem to make whole food. They supply sort of the ingredients, so it's a bit of a sort of farming infrastructure. They also do transport and sort of a whole host of things really for quite a cheap market cap. They sold 25 billion. I mentioned this. I bought a little of them in the update of the weekend. Very interesting company. Sort of take Zoom, for example, at 120 billion. These sort of own tremendous amount of stuff. For 25 billion. So see that as a strong one going forward. BHP, as I say, to complement Rio Tinto as sort of one of the major miners. Thinks this gives me a little bit of diversification across sort of base metal miners. Both one of the biggest sort of couple of companies in the world. Rolls-Royce is sort of an interesting, basically part of the trio of Airbus, Boeing, and then they sort of have a reasonable hold on the sort of engine market. They also make sort of components for submarines and all that sort of thing, industrial defence sector. So in a little bit of trouble. They've sort of struggled through the COVID crisis. Might be one that I would sort of wait and not invest in quite yet, but certainly a long-term hold if they can turn things around. Then Lockheed Martin and Raytheon Technologies, two sort of defence companies, quite US focused, but quite happy with that because the US seems to care more about their defence side than anyone. I mean, not sure who they think they're going to be fighting with this army of theirs. But yeah, Lockheed, I think, are sort of now in for a, I think, $500 billion contract for the new fighter jets. With the maintenance, it should apparently rise to over $1 trillion in the next sort of 50 years. So they're not going anywhere anytime soon. And Raytheon, sort of just a little bit of diversification. They get involved in different stuff. A little bit undervalued at the moment. And then last but not least, I've got Primary Healthcare Properties and Assura, two sort of similar companies, real estate investment trusts. They sort of they're involved in, they sort of own doctors' surgeries. I think Assura are sort of more in the doctors' surgeries, and Primary Healthcare, sort of similar healthcare type buildings, sort of walk-in centres and medical centres and that sort of thing. So not really sort of going anywhere soon. NHS type government buildings basically. So seems a solid income, both reasonable dividend. So yeah, that is basically the pie. It's not 100% of the pie. As I say, there's a few companies. I also want to hold TSMC, Taiwan Semiconductor. They sort of get involved in making the chips for some of the sort of big companies, Nvidia, AMD, and now that Intel are not going to have anything sort of apparently close to AMD for a little while. I think TSMC are going to be sort of making a lot of chips going forward, so I want to hold those. I think they're in the invest account at the moment, not in the ISA, so just don't have them in this pie, but that's a long-term hold. There's also two real estate investment trusts in the UK, Target Healthcare and Impact Healthcare. So would like to hold those two. They're both sort of care home REITs basically. I think the sort of UK care home industry has always been fairly solid. Charge a lot, they make a lot of profit, so Obviously, the REIT owns the building. It doesn't get the income from the care home, but gives you quite a bit of assurance that they're always going to pay their rent. So those two, and TSMC and Tritax Eurobox at the moment can't go into this pie, but I either just have them in my invest account or maybe in my other ISA, the iWeb ISA. So yeah, that is the dividend pie. Let us know. This hopefully is going to be my sort of probably about half of my overall portfolio. Once I sell out of everything, it'll basically be put in sort of basically these percentages, and that will be half of my portfolio to retire on, basically, with the other half being the ETF one. So yeah, leave your thoughts in the comments below on this. Any suggestions maybe to get rid of or to add. And like is always appreciated. If you wouldn't mind, hit the like for the YouTube algorithm, and subscribe if you want to see more.